All right, let's get back into the questions from Chris. Can you go guarantor after retirement using equity on income? Oh, I was about to say income protection. You need that if you're young and you're going to get properties on investment property. So I'll just throw you an example, Rach. Chris has a child. Child's 25. Chris owns a house. She also has an investment property worth $1 million. Not much debt on it. She wants to help the son or the daughter who's 25, doesn't want to use the house, or she could be renting or whatever. Can we use the investment property to help the kids?
You absolutely can. So when you're offering a parental guarantee to your children, now just to actually just go back a step, a parental guarantee is when the bank takes a hold or a second hold of a limited amount on a property of yours, whether that be your home or an investment property, or it could be even a term deposit, and they use that as the security or the gap in security of the property that your children are buying. So they essentially don't need to have any deposit and they can go into the property market based on their income alone.
So if we rewind to the start when we were talking about the bank just want to see two things, income to service, security or equity to not lend 100%.
That's right.
However, and this is a lot of people, they can afford the mortgage, but they don't have the spare cash to save for the deposit. Especially
people renting now.
Yeah.
They don't have the ability to save that deposit. So we're seeing more and more parental guarantees in the market. Now, if you are wanting to offer a parental guarantee, you don't need to be working, but it will alter the bank selection for your children. So some banks want you to be working. Some banks are happy for you to be retired and put it against your own home. But there's only 4 out of our 30 lenders that offer parental guarantees that will do that. But they're all great and reputable banks, so it doesn't matter. So when we're choosing a product for a parental guarantee, we will look at not just what's best for the people buying, but what suits the guarantor the most as well, like what's going to suit what they're going to do.
So this is interesting because a lot of parental guarantees that happen, and someone might be in their 50s and they've still got a $300,000 mortgage on a $800,000 house or whatever the situation is, they can still use some of that equity as the security for the children. But what you're saying is, if I came to you and said, hey, Rach, I'm 55 and I'm Glenn, it's probably next week, and I've got a child who wants a property, we know that there is an existing mortgage on the parents' house. We know that the kids will get their own mortgage against 80% of the house, but still pay 100% of the mortgage.
Yep.
Because the 20% security is coming from the parents' home or investment property. So there could effectively be 2 different mortgage or 3 different mortgages, depending how you split it or do the mortgage splits. But I guess what I'm trying to say is your team would have a look and say, on balance, the most favorable outcome in terms of ease of getting it done, serviceability for the children and the rate for the children and the vibe for the children. And also it's not going to cause too much issues for the parents, because you can't, what I'm trying to say is if the parents had a loan with CBA of 300 grand and the kids wanted to bank with ANZ, you can't use different banks for the parental guarantees?
You can. So you have to use a bank that will go what's called second. So ANZ, great example, will go second to CBA.
Cool. Okay. So again, this is why we get experts on. So there are a million situations that parents can help their kids, because the parent might be like, we've banked with CBA for 1 million years. We love it. The rate's great. We'll help the children, but we want to stay with CBA. And the kids might be like, whatever, just get us out. And
you're saving 30 grand in mortgage insurance. You'll take the bank.
That's right. But the thing is, you can then look at the kid scenario and go, oh, they're not going to be able to service with CBA, but they will with ANZ. So we can tie in ANZ as a second to the parents' property.
Yeah, and that's right. And some of the banks take just a less aggressive hold on the property too. So, if the parents are still investing themselves, they want still flexibility on their securities. So all of those things come into play when you're choosing a bank.
Talk to us about, with this parental guarantee thing, probably a thing that needs to be considered, which I think it's an overall low-risk strategy, but talk to me about a full guarantee and a limited, because we want people to consider limited guarantees in the first instance. Is that correct?
That's right. So we'll only do limited guarantees as a business.
Okay.
And I've noticed that some of the banks that wouldn't offer limited guarantees have actually come out of the market.
Right.
So, and one of the majors would only do a full guarantee. So that's when they're taking the parent's full house as security, which means if they're getting into a default situation, they can sell the parent's house. Like it's a big thing. And they can choose which house they sell first. So some of those banks have actually pulled out of the market altogether. Traditionally there's been some banks that have done it really well, which is a limited guarantee. And so that means it limits the risk to the parents. So let's say they're buying a property for $500,000. There might be $100,000 guarantee against the parent's property. Now, they might think, well, that's not a huge risk, but it's still $100,000. There's still a risk. So our aim is always to get that guarantee released as soon as we can. So as soon as the kids, I call them kids, they're never kids. We did a parental guarantee recently for someone who was 55 as the borrower.
Okay.
Yeah, that was their first home.
It was like an 80-year-old.
First home buyer, yeah.
I had a client, this is sidetrack, he was 65. We did the retirement advice for him. Lived and worked in the city, Sydney, right in the CBD, rented there all his life. Had never purchased a home before, moved up the coast of Foster, right? Bought his first home in a lifestyle park. So not retirement village, and everyone, there's episodes the last few weeks where we did lifestyle village versus retirement village. We got him his first home owner's grant of, I think it was $7,000 and no stamp duty at the time. And we just had to, and I went up and visited him. Revenue New South Wales, I literally remember getting underneath. They just wanted to see a photo that the thing wasn't on wheels.
Wow.
Yeah, so he paid like $70,000 at the time. Then he ended up not paying any stamp duty and got like, I think, $7,000 to $14,000 in the first home owner grant.
Fantastic.
Yeah, so I mean, this is good stuff. So all that to say, there are options.
There are,
regardless of your age or stage.
That's right. And that parental guarantee, like I said, can be released when the property value of the kid's property has increased and the loan has decreased and they represent 80% of the value.
Or if they get if it is if there could be a parental guarantee of $50,000 and the kids work really hard to pay down the mortgage to cover that 50, then it's released if the property value hasn't increased.
Can I tell you what my team are doing today?
Ooh. Go on.
So because that new policy's come out, that says paramedics, firefighters, police and nurses can do 90% no mortgage insurance or 92% in some cases, they're on the phones calling people that we've done parental guarantees for that were waiting for an 80%.
But now we can release them.
But now it's 90. So if you did a parental guarantee for your children and they're in essential services, you can release them quicker than you thought.
Rach,
or release yourselves.
Rach, you helped me once and I probably shouldn't have done it, but Mum was in a good mood. And it was just because it was transition period. I had my new business. I wanted to buy this
How
another
long
property.
ago was that?
Oh, God. It would have been 2016 maybe.
Yeah.
So long story short, I bought a little investment property. It was $400,000. And it was funny because John at the time, I didn't really know John at the time. And I'm just like, my strategy was, it's a really dumb strategy. It kind of worked. I'm like, $400,000, brand new townhouse in a complex of 2. I don't know if you're going to, and right opposite a shopping centre, near a bus stop, all that. I don't know if I can wreck this. It was near a main road because the floor of housing in Australia, particularly around the Central Coast, like $400,000.
Wow.
And I'm like, oh, hey, I need to do this. And Mum had some money come in from somewhere and she was getting ready to look at retiring. And I would, literally started my business and I was really kind of in the flow of it, maybe even before 2015. Anyway, either way,
Yeah.
you put, so I think 80 grand or something or 100 grand in a term deposit because it was only a period of a year and a half that I needed to do this. And mum's like, yeah, whatever. Like she had the term deposit getting interest, but the bank secured that term deposit against my property.
I remember. And you can still use the interest, you can still get the interest and use it. You just can't close the term deposit
because
down
it's secured against
until the
house.
guaretee's released, which is what some people
and it
prefer.
just kind of worked. Like, mum had this money. We had to wait. There was some timing thing with the super or whatever. I'm like, look, let's get this, park it. Hey, while it's parked there for a year or whatever, can your little boy, favorite boy, Glennie, just borrow that? And so lots of options.
That's so good. I actually did one in 2007. So it wasn't my first property. I'd bought a house to live in, but there was a really good set of duplexes that came up and it was going to be a mortgagee in possession. I knew I would get it for a good price and I didn't have the equity in my home yet to buy it. So I used a parental guarantee for an investment property, but it was only in place for a year because I renovated it and released it quickly.
But the interesting thing is with this whole parental guarantee thing, and this is why I think it's an important episode, peeps, if you want to send this episode to your kids just to listen to, my first home that I purchased to live in, I didn't use a parental guarantee. I decided to pay the lender's mortgage insurance because I knew mum and dad were going to move and I just didn't want to overwhelm them and I like just paperwork and I'm just like, $14,000, I'll just pay a little bit of LMI and it all worked out. And realistically, anyone who bought a house 10 years ago in Australia or a property, you've probably done all right. So yeah, look,